Passage to Profit continues with Richard and Elizabeth Gearhart.
Fantastic program this evening, and we're on to our final pitch now with
Portfolio Shepherd.
You have 2 minutes. Go.
My company is ETFification, and what this company is financial education and an investing tool. The reason I came up with this company is because I've been seeing massive shifts in the way people are going ahead with their investing and what people have the attention span to basically consume. So I've created this to take advantages of technology and bring it to the XYZ generations. The company is really twofold. On one side, it's all of that education. So things like BuzzFeed, Investopedia, Morning Brew, and the Daily Skim, all these kind of new, small, kind of easy to access information. We're going to be creating stuff that's going to help explain investing and finances for a new generation. Then the other side of the business is our take on a robo-advising tool. So companies out there that are similar are Betterment, Wealthsimple, Acorn, Stash. There's a myriad of robo-advisors out there. But what our company does and how we differentiate is that we're a paper portfolio. We don't actually take your money. We'll just show you what those other robo-advisors will do, but we won't charge you based on the assets under management. So we really feel that we want to put the power back into the hands of this new generation of investors that are going to be having money come to them, not really sure how that they should go about investing it. So we really want to empower them. And that is the tip of the iceberg. There's a million ways we could go into it. So I'm very excited to get in the conversation with any questions.
That's great. So what do new investors need to know about investing?
That's it. That's a big question. Thank you. And I only have a 10-minute segment here. What I would say is that there's a big fear with investors. And so what we're trying to do is to take out that fear. And so what we want to do is to create a big kind of repository of information that's going to be a good kind of overview of everything that you'll need to know. But if I could say one thing, it would be to invest early, to start early. You don't know what you don't know out there. If you're not taking advantage of your company's 401k match, that's something that you should be doing. The advantages of compound interest, this is something that you should be taking care of. There's some simple steps that you could take, but people feel overwhelmed with this information. So people kind of stay away from it. And we're trying to create new content in a new way for people to, not be afraid of it.
So how do you present the information? Is it YouTube videos? Is it something you read?
Absolutely. It's what I like to call the information escalator. You can kind of get on it wherever you are with your financial education. You can kind of get upskilled up. And so, yes, it is YouTube videos. We have small articles on our website, interactive, so you'll have different hyperlinks inside those articles. So somebody who is familiar with the terms can kind of read through it and get it at one level. Somebody who needs a little bit more education can kind of click into some of those hyperlinks. And then we intersperse that with things like memes. We'll have a photo on Instagram, and we'll talk about an IPO, and we'll take a common popular meme, and we'll inject finance into it. So we'll use a lot of humor so that somebody won't even realize that they're learning. They'll come in and say, oh, I remember this meme. Oh, it's an IPO, and oh, okay, this is how it relates to finance. And then we'll kind of create more assets for people then, if they want to spend more time, to click down further, to go refer back to the website, to see more articles, to kind of educate them on the topics that they are interested in. So, it's not just here's a big textbook. It's, here's a little nugget. And if you want to dig a little bit deeper, go ahead. And we have this kind of repository of information. And by way of background, I've been so excited talking about the product. I've been working in finance for 20 years. I've worked with top 100 of the asset managers by assets under management. I'm a chartered financial analyst. This has been kind of my career for about 20 years of my career, and I've just kind of branched off to do this for the last year because I felt that there's a gap in the market. The traditional robo-advisors that are out there aren't really, accessing the generation in the right way.
Can you explain what a robo-advisor is?
Yes, absolutely. Everybody seems to have one nowadays. And how this works is instead of paying a portfolio manager, Joe Schmo from Idaho, 2% of your money in order to go ahead and manage it for you. And by the way, the vast majority of portfolio managers lag their benchmark. So instead of paying a portfolio manager 2 and 20, which is 2% of assets under management and then 20% of any profits, robo-advisors will do it automatically with math, and they'll automatically trade your assets for you and charge you a compressed fee, something like 35 to 75 basis points, which is less than 1%. And they claim that they will outperform the active managers because they're charging you less fees, and over time, that's going to be the biggest benefit.
Oh, that's a great way to explain that.
So statistically speaking, though, how do robo-advisors stack up against live advisors?
There is a lot of information out there right now. The one thing that we know for sure is that active managers, in the vast majority, lose to their passive benchmarks. So something like 90% of asset managers whose only job it is to manage your money over the 10-year period lose to the benchmark. And there was a hugely famous bet between Warren Buffett, who is one of the all-time greatest investors of all time, and he bet $500,000 to any asset manager out there that I will beat you over a 10-year period just by investing in the S&P 500. Somebody raised his hand, took him up on it, and sure enough, it was last December, it came due. Warren Buffett won this $1 million bet, donated it to charity, but it's just indicative of the fact that asset managers and their time of managing other people's money, because it's a little bit archaic and hard for people to have access to the market, those times are due, the tides are changing, and information is out there for people to manage their own money themselves, and we're trying to present it in a new modern way.
So what if this had been around in 2008? Because we knew some people that basically their financial advisor put their money in one of these mortgage companies and it was gone. It was a retirement.
2008 is a great year to talk about, and it's incredibly pivotal for my business. 2008, two things happened. This crisis that you talked about, as well as that's around the time smartphones came out. So people that are a little bit younger, they remember this. This is, right in their memory. It's not just, I'm going to go ahead and invest and I'll be fine. I have a fear of these institutions. There's no guarantee for success. If you're invested in the market, you're obviously going to be taking on risk. So a robo-advisor is not going to take that risk out of the market. If you're invested, you're taking on risk. What a robo-advisor would do is you would put your risk scale somewhere from 0 through 10. And if you were on a 0, if you were on the less risky side, you would be less invested in assets that are volatile. And so you would be more invested in fixed income instruments. And so in that capacity, you would experience less of the downturn and less of the upturn.
So ETF-ication has a product where you survey all the known robo-advisors out there. And then what do? You comment on them, you post results. Do you have your own robo product?
Actually, what our product has is the same engine as most of the other robo-advisors, but we don't take custody of your assets. We will provide the same engine and then allow you to play along in a paper portfolio and say, oh, okay, if I invest this way, then this is going to be my return. So it's going to help educate somebody as to how am I doing to empower them to feel, better about their investments. And a lot of people are invested in these other robo-advisors and they don't necessarily know why or how they're doing, and they have a fear of getting into it. So this is really to take out that fear.
Is there a human element to the company?
On the education side, there's a very human element. We're working with people to create literature to help educate people. But as far as the purely robo-advisor side of the company and the tool that people can kind of play along with to emulate, that's based off of that same math.
And so what is the revenue model for your company then?
So the revenue model is a small price, a monthly recurring fee for access to the app. And then inside the app, people can have upsells. So the idea is the content side of the business is all free and outgoing there to the public. And it's kind of doubling as marketing for the company, make people feel safe about the finances. Then the app, they say, okay, I've gotten all this good advice, and this is free advice, and I could check it with what else is out in the market. Then the app is $1 a month for the base subscription, and then you can upsell. So if you wanted to say, all right, well, I'm just looking at one portfolio, which is a risk of a 5, and this is how it would perform, in this environment. But I'm also curious, what if I did a risk of a 9, and I rebalanced it more frequently? How would that do? So I'm getting more interested here. They'll want to get more involved. They can pay a little bit more and get that as well.
Have you thought about the college market, like bringing this to colleges and universities or even high schools?
Absolutely. I think financial literacy is something that is very underserved in current situation. One of the articles actually we're writing is about comparing finance to Vegas. And, we'll use kind of these types of analogies to bring in the human element so that it'll help educate people. Roulette, if you're putting it on black, that's basically a 50-50 bet. But if you bet on, black 38, your payout is going to be a lot higher, if you hit on that number. In a way, the analogies between that and the finance market are huge. And if you explain to somebody that, if you invest in a stock, that's like buying, black on the roulette table. But if you buy an option that's far out of the money, that's like putting it on black 38. Less likely to hit, but if you do, bam, that's a lot of money.
I love going back to the advice that I had always heard, which is buy low, sell high, right?
Yes.
Maybe
Yes.
you just need a website that sells that.
Yes, yeah.
It's been absolutely fantastic having you on, Michael. And what is the name of the company again?
Name of the company is ETFication. The website is etfication.com.
And we hope after you make your first $1 billion, you'll come back and invest in Passage to Profit, okay?
Absolutely.
All right, great. Well, you're listening to Passage to Profit with Richard and Elizabeth Gearhart and our special guest this evening, Brian Moran, and we'll be right back after this message.
Passage to Profit continues with Richard and Elizabeth Gearhart.